Well, welcome back to Bullish, everyone. We got Sam Hardy here, Nick Stenger, producer Owen in the back. We are Stenger Family Office. For the past 43 years, it has been our mission to deliver both clarity and confidence to help secure your financial future. Episode 14. Got a great one lined up. Be sure, if you didn't see our last episode with CEO, CIO of Strive Asset Management, Matt Cole, be sure to check that out. We also have a great guest lined up. We're going to have CIO of First Trust, Dave McGarrell, joining us next week. So be on the lookout for that. And be sure as well, if you like what you're hearing from us, be sure to like, subscribe, share it with your friends. We want to get it out to more people, the clarity, the confidence, right? And remember, above all else, anything that we talk about here is not individual stock advice. Past performance is not a guarantee of future results. Stenger Family Office and its clients may hold positions in some of the stocks discussed. For full disclosure, visit StengerFamilyOffice.com. Nicholas,
Welcome back, buddy. How you feeling?
I feel great.
We're back.
I'm not happy about the snow outside.
No, it is snowing in Chicago, but we are back. We're bigger than ever. We got producer Owen back in the saddle.
Yeah.
Big guest coming up. Big guest last time.
Yeah.
That was exciting.
Yeah. Be sure to check those out. Got the new studio set up. This is our first episode. I know you shot a couple of Nick Stenger shows in here already, but first Bullish episode in here. We'll have our first live guest with Dave. So very excited for all that.
Check out the background. We got mobile gas in the background. We got the Walgreens truck. Sorry, Walgreens. Haven't pulled up the stock today, but I will say that was a good call that we made.
Oh, trust me.
Call?
I looked it up. We will be talking about it. There is a chart. We're hitting all-time lows for them.
Down 30% for the year.
Yeah.
But we do have the mobile oil truck hitting all-time highs. Exxon here today at 119 a share. Unbelievable.
Yeah. Energy is looking strong. I think this is what I have for the first. Obviously, Fed interest rates, big talking point continues to be. We'll get to that. I don't love starting talking about them. They're kind of boring. Jay Powell, best Fed chair we've ever had, but we'll get to that in a minute.
I wanted what Siegel said about Jerome Powell.
No, what'd he say?
He said that Powell is like a drunk driver.
Oh my goodness.
Who hit somebody with his car, but then was able to take him to the hospital. And that's how Powell has handled the economy.
Oh, that's really good. He is also Jeremy Siegel's favorite.
Absolute legend.
Yeah.
Not
Siegel is.
Different Jeremy.
Or Jay Powell.
No. Well, they're both legends in their own right,
yeah.
But different Jeremy coming this year.
Yeah. Yeah.
2 weeks.
That's going to be very exciting, having Jeremy Schwartz for that's going to be episode 17.
Yes.
I believe. By the time we get there. So first thing I wanted to start off here, buddy.
16.
I know you don't.
Wait, is this 14? Next week's 15.
Yeah.
The week after that is
16. So it'll technically be 17.
We don't know how to count here.
Apparently not. We did screw up an episode number before. That was on me. Producer Owen could take some blame for that, but
it's 50-50.
Right. We're getting into the stories
I take
here.
None of the blame.
Yeah, that's fine.
Show up.
That's fine. That works for me. 4-day work week. What do you think about that?
I don't love it. Because you know what? There's so many people. Everybody here, they're going, we need a 4-day work week. I'm sorry, but if you're in a different country other than the United States, you're probably working 7-day work week.
Yeah, or at least 6. You got to take the Sabbath one day, which not everybody really cares about. But
Elon Musk is not taking a 4-day work week for sure.
No, we would never be able to. I mean,
it doesn't work.
We're usually 5 or 6 days, and if we were to ever not work on days when the market was open, and so this was Steve Cohen who was talking about it. I just wanted to hit it really quick because I thought it was interesting, and I really enjoy golf. We've got the Masters coming up next week, which I know you will watch some, but I will try and sit in front of my seat and at the TV the whole entire weekend and watch it. Probably not going to go as well as I'd like with the boys, but we'll see. But basically, I mean, we've seen disruption from Live, right? Now we've got a new, it's like a 3v3 tournament. Have you looked at this, Owen? It's called the TGL, Tomorrow's Golf League, and he bought, I think he bought the New York team. There's like 6 teams. They're doing a tournament. I mean, it's all very interesting to me, who loves golfing. But he was basically saying he's bullish long-term on 4-day work weeks because of AI. And he thinks that's going to, in some industries, allow people to only work 4 days.
Interesting take.
Yeah.
Now, I did just watch, do you watch Curb Your Enthusiasm?
A little bit, but I don't watch a lot of Larry David.
I've been going back season 3, season 4, way back. and great episode where the meteorologist purposely tells everybody that it's going to rain so that he can go golf and it's not busy at the golf course. So
That's a genius. Speaking of great shows, I watched a full season of Entourage last night
very
while
nice.
I looked at all this
Very
stuff.
nice.
So if there's some, airs, that's why.
Great show.
Anything else
They
there?
don't
I
make
mean,
them like that anymore, by the way.
no. Okay, let's talk Disney proxy battle. I know this is kind of more recent, so there's still some facts, some figures coming out in it all. But for those who aren't aware, it's Tryon Group, Blackwell's Capital, both launched separate proxy fights. Tryon was going for 2 board seats, as well as Blackwell was going for 3. So Disney actually ended up winning the whole thing. I don't know. What are your kind of initial thoughts coming into it here?
Yeah, I actually we voted our proxies for clients with Peltz, with Nelson Peltz, and I thought he would have been a nice addition to the board to get him back to a more neutral spot. But Disney's in huge trouble, and I think people don't really understand how overvalued the stock is right now. We're trading it at a 74 price to earnings ratio. I think a lot of the run up this year, up 30% year to date, is because maybe there was some indication that Bob Iger could restore the magic, bring things back to where they were. But Disney's made a lot of mistakes. I don't think you can discount how bad some of these mistakes can really be, how permanently damaging they can be. We talked about Walgreens, right? Not to jump to that too quickly, but the opioid settlement literally wiped them out.
Yeah.
I mean, like it doesn't take much. Warren Buffett had a great quote. It takes you a lifetime to build up your reputation. It takes 2 seconds to destroy it. That's basically what Disney's done the past 5 years. The stock is up 4% total since 2019, literally 4%.
Yeah,
The
I was
stock
gonna
market's up
say
80.
it's up 50. You said 30% year to date. It's up 50 from those October lows, and then it's still down 40. I mean, everything ran up during COVID there, especially some of these places that had exposure to streaming services, and from there it's down 40% from its highs back in 2021.
I just don't know. I don't know what the long-term story is on a company like Disney. Like the studio business is not that great of a business. Look at Paramount, right?
Yep.
Like it's not consistent. You maybe make 100 million, then the next time you only make 5 million. So it's just so tough. Um, I think a lot of this was valued on the streaming business, on the reoccurring revenue. Which do you guys have a Disney? I would think you have a Disney Plus with 2 kids, right?
Yeah, we do, but we get it through we get like Hulu, Disney, and
It's bundled together.
one other thing through Verizon.
So ESPN is a spinoff. To me, makes a lot of sense. I think that needed to happen. But look, we're rooting for Bob Iger, right? I wish him well. I hope everything works out for him. But that return as CEO typically doesn't work very well on Wall Street. So we'll see what happens.
Yeah, and to your point, they were engaging in, and creating content that most people who look to Disney and, with kids and everything, what they were wanting to watch, that's not the content that they were, creating. And it takes a long time to reverse that. Think about the millions of dollars lost on projects. You had, what was it, the Snow White remake, total disaster, and a couple other things. And so, I mean, it's especially in the current kind of political environment we find ourselves into. It's just really hard to pull a 180 like that. As good as Bob Iger was back in the day, he's certainly fighting an uphill battle.
Yeah, absolutely. I think it's going to be a long road for them, and I don't know. Do you want to go pay 73 times earnings? Knock yourself out. I'm not doing it yet.
Yeah, I'll be honest. I didn't realize it was that expensive. I know they'd had a run up, but I didn't realize it was that expensive. So, all right, let's get into the Fed now. 2024 meetings. Obviously, they've maintained rates where they were at for the past 5 meetings, and we've seen. I mean, the street certainly thought there was going to be 5 or 6 cuts this year. That has slowly kind of fallen as we've seen CPI and inflation kind of stay steady here at the beginning of the year. So I know they just paused at the one on March 20th. Fed Jerome Powell, our favorite, again, came out. He was doing a speech at Stanford University and continued with, hey, we need to definitely see some meaningful progress and want to wait and see what's going to happen at getting that inflation down to 2%. They're still saying that's the goal. I don't know if you think that's possible or what the case might be there.
I don't really know if their true intent is to get it down to 2%. Like I think part of that's just to scare people and get the market to do his work for him. I
Be a
don't think
little
we're
hawkish on purpose.
yeah, I don't think we're getting down to 2%. Like I don't even think if you raise interest rates to 10%, I don't know if we get down to 2. Because the problem is there like you've got all these corporations sitting on record stockpiles of cash. I talked about it this morning on my show. There's $6 trillion on the sidelines.
Yeah, I've got a
So
chart on that too for like corporations specifically.
yeah, so like are you really going to affect a lot of these wealthy corporations, a lot of these wealthy families? Like I don't think you can do it, even 10-20% rates. So all you end up doing is crushing the small people. You push all the small business owners out of business. You push all the lower income people out of a job. You saw California did a $20 minimum wage.
Mm-hmm.
And what do all these companies announce the next day? Layoffs. I mean, it's
Well,
not,
layoffs, or I've even seen some of these small mom and pop restaurants with 20 people working there have just said, "Hey, we're closing our doors."
yeah, they can't do it.
Yeah. So
So
did you see New York too with Uber Eats? The minimum wage was being raised from like 570 something to 1950
it's
now.
wild.
As so, I mean, we'll see if people continue to pay those prices, and that's just New York
Yeah.
specifically. But it's certainly something to be keeping an eye on.
I don't think we have rate cuts this year.
You don't think this year? None at all.
I'm starting to change my opinion on this. I don't know if we have rate cuts.
Here. Oh, you can if you want to pull this up. This actually was just posted this morning. I thought it was pretty good. I mean, we look at a lot of Charlie Bilello stuff, just kind of talking about what
Can you click on that chart?
he's not saying he thinks this is going to happen, but this is what's kind of being priced in. So end of 2024, we're looking at a target rate around what does it say there? 4.5 to 475, which would insinuate there's going to be in the remaining 6 meetings, there will be 3 25 basis point cuts and 3 pauses, and that begins in June. That's kind of that's what everybody is thinking. I saw a bunch of the big firms as well who are putting out their estimates that they've changed 3 times since the start of the year already. Is June's kind of the consensus on the street right now?
Yeah, I don't know. I mean, I look. I think if you go back to 1900, the average CPI increase has been 3% a year.
Yeah.
So why are we saying 2? I mean, two is just in the past 15 years, coming out of 08 and 09 when we had record low inflation. So now we're saying we have to get back to 2. Why? Who set that rate? Why couldn't we be at 3? We've been at 3 for 124 years. So, but I don't know what the Fed's going to do. I don't think Powell knows what he's going to do.
I don't think, and even you're getting very different, not very different viewpoints, but there's certainly other Fed chairs that are coming out. I know it's like Raphael Bostic, he's the Atlanta Fed chair, said he'd be surprised if there was one rate cut. Like that's what he has. We'll probably see one. And there was a couple other people.
You still have people at the Fed saying they want rate hikes.
Yeah.
So where are you going to come up with cuts? I don't know. And I think the only catalyst, the only thing that's going to actually make them cut, it's not going to be a recession, because a recession's always called in reverse. It's like like 6 months later, oh, it looks like we were in a recession. The only thing that's going to slow them down is the job market.
Yeah, well, we're still at record low, and we'll probably get into this a decent amount. We've got non-farm payrolls come out tomorrow. We'll probably talk about it with Dave on next week's episode, because I know that's something they're paying attention to. But it's still record low unemployment
For now.
for now. Yes,
We're
which can change
3.9%.
very quickly.
We're at 3.9%. We're up a 0.5% since the all-time lows under President Trump.
Yep.
The economy could still support 6% unemployment. And I'm not rooting for that. I'm not saying that's a good thing, but it's basically been an employee environment for the past couple of years. And a lot of the job switching I think that's happened is done. Now I think it's going back to the employer, and with AI, with some of the automation, with some of the things going on, I think people are saying, listen, do we need an extra 10,000 people? Maybe not. Look at Tesla. Did you see Tesla's even saying they're looking to their managers to say who's not essential?
No, right? I hadn't seen that. But I mean, yeah, I mean, you and I pay attention to it a lot. There's a great person on Twitter who tweets out, I can't remember his name right now, but they do a great job at kind of just keeping us updated on what layoffs are currently happening and everything like that. So, I mean, there's definitely wider spread. I think we saw a lot in January, a little bit less in February, and a little bit less last month. but we've certainly seen kind of a consistent where all these corporations, especially tech still, is reducing headcount just in case anything were to happen. So the last comment I kind of had on that, which I thought was interesting, is he made a very specific point to talk about politics, how they are public servants, and it's their responsibility to stay out of it. So
yeah, they are not political at all.
no, not one bit.
The Fed is not political. They never get involved with politics. And it's not like Powell worked for the Trump administration or Yellen worked for or now currently works for the Biden administration. So it's not political at all. You know, it's just a big revolving door where they go in and go out.
Yeah. So he made a very specific point to talk about that. And I certainly agree with your remarks there. Okay, let's talk. Anything else you want to say there?
Nope.
Okay. Let's talk Fidelity suggesting a crypto allocation. This is interesting. They have like a 30-page document on it. Basically what they're saying is
read us all 30 pages right now.
Yep. Okay, we're gonna do a monologue. Excuse me. All right. This is the introduction written by. No, I'm just kidding.
Where's the disclaimer?
Oh yeah. Anything is not investment advice, and Fidelity. I'm not gonna butcher those guys' names.
Wait, pull up their names. Oh, okay. Those aren't that bad.
No, Jurian, Emil, Mike, all people from the Fidelity research and allocation team. Basically,
Nice.
This is their argument.
You did better than Von Roth would have done.
Yeah. That guy can't pronounce names. He needs some help sometimes. That's okay. He's our old guy. But let's talk real quick. They're basically saying, hey, there's way more upside potential to this if it does. I mean, you see people. Well, I think Kathy Wood has some wildly outlandish price target, like couple $1 million
Is that what
for
she's saying
Bitcoin
now?
long term.
I knew she said 500,000 a while back. I'll look it up.
I think it's gone up from there, but they're basically saying, hey, if you put 2% in your portfolio,
3.8 million now.
Oh, so it's gone up. Yeah. So I mean, there's life-changing upside potential if it were to get to that point. And if it goes to zero, the overall disappointment to the portfolio is or loss on the portfolio is 1%, basically. So this is actually, if you want to show the screen really quick, I think this is
this is interesting. So they're basically saying worst case scenario, you get a little exposure to crypto, but you could lose everything, and then it would only be a 1% loss in the portfolio.
Yeah, here, let me read it really quick. It's saying it could allow your annual retirement spending to increase 1 to 4%, while limiting the loss to annual retirement income to less than 1% if Bitcoin were to lose all of its value. So because you have it at such a small piece of the portfolio, if it does go to zero, you're not going to see that big of an impact. So basically, suggestion is if you're around our age, do 0 to 5%. If you're 10 years down the road, 0 to 4. And then if you're in that right before retirement or retirement age, you could do 2%. Is basically what they're
basically saying you could make 1% if it doubles, or you could lose 1% if it goes to zero. So
yeah,
I don't know. That's like anything else. I mean, you could buy Nvidia stock, and I mean, there's a lot of people that think Nvidia is going to double.
And I think
trust Nvidia stock more than I trust Bitcoin. I'll tell you, quite frankly, I definitely don't know what to think about. I have no opinion on Bitcoin. I literally have zero opinion. I don't know if it's good. I don't know if it's bad. I don't know that much about it. I don't know what it's going to be used for. I know the government's going to want to control their currency at some point. So maybe they take this and turn it into a digital dollar. But I also know, just back to fundamentals, back to principles of investing, it's like, if it's that obvious, it's usually not that obvious. Like if it's that easy to, just put 2% in Bitcoin and maybe it'll double. It's like last time we said that everything went to zero. So I don't know. I think it's when it's that obvious. It's like the rate bet. Remember I screenshotted that article at the end of last year where it was like everybody sees how obvious the duration call is on bonds.
Yep.
And long-term bonds this year are down 7-8% now. So, anytime it's that easy or it's that obvious, that's when you usually don't make any money and you lose everything. So I don't know. That's my only problem with it. That's my perspective. I could be completely wrong. Bitcoin could triple. It could go to 500,000, 1 million. Maybe I'll be wrong. I don't know. That's just my sentiment.
Yeah, well, and now we've got the 10-year treasury back up at 440 basically to reiterate your point there. I mean, this is the interesting thing for me. The whole argument on this was, hey, this is a decentralized currency option that the government doesn't have control over. And I actually here I want to show this too. This is oh good, we're getting a refresh. This I think is very interesting. And okay, so that was the original pitch on it. Nobody has control of this, completely decentralized on the blockchain, all that kind of stuff. You can see, if you show this, BlackRock CEO Larry Fink, it was a Bitcoin is an index of money laundering. That's in 2017. And then at the beginning of the year, they were, some of the biggest catalysts in making sure these 11 ETFs made it to the market. They've raised crazy amounts of assets in their Bitcoin ETF.
Now they all figured out they can make money on it.
Yeah, well, and they're talking about the tokenization of everything.
Right.
I do think that's interesting, and I've had conversations with a number of people on it where you basically use, and this is where maybe the value is. The blockchain is a way to tokenize, give everything kind of a marker, ticker to some extent, and then you can track it all. And I mean, I don't know if it's going to be a disruption to your typical exchanges or anything like that because it is a lot cheaper. It was like I just saw something about the U.S. had confiscated 2 billion, which again, decentralized, nobody can do anything about it. The U.S. just they confiscated $2 billion in
Right.
Bitcoin. They
Right.
transferred it from one wallet to another.
Yeah.
Guess how much it was
How much?
that people were talking about? $1.50
Really?
to transfer that many assets from
Oh,
one
got
wallet
it.
to the other.
Wow. Right.
So I mean, it could kind of
Yeah, but
bring
I mean,
costs down there, but
yeah, but like the whole thing with blockchain, it's been around for 10 or 20 years or something like that. Like
yeah.
JP Morgan's been using it for 10 years at least. So it's not even new technology. I don't know. It's just the hype just seemed it's almost like the AI hype where it's like, oh, everybody's gonna be a robot and like we're not gonna have any
And
more
work 4 days a week.
yeah, it's just like I feel like these projections just go way too far. It's like the whole Ozempic thing, the GLP, what are they called?
Yeah,
GLP
the
one.
GLP-1s, yeah.
And a lot of that is hype too. Oh, we're gonna put everybody on a magic
Well,
weight
people are
loss
talking
drug.
about that being more revolutionary than AI.
Right.
Like the stocks to
Right.
play in are the GLP-1 stocks.
Right. So
So,
it's just like, oh yeah, everybody's gonna go on this magic drug, this magic pill. It's gonna make you lose weight with zero side effects. That's called
except you lose all your muscle mass.
that's called fantasy land.
Yep.
So I don't know. It's just again, warning for investors out there. I don't disagree with Fidelity. If you want to look, knock yourself out, put 1% in it, see what happens. But please be careful. I almost would rather have gold.
Yeah. Well, there's all
And you
there's
know
all
how much I love gold.
these buyers, they don't even know who they are. They hold billions of dollars of coin and you have no idea who they are. So anyways, let's move on from there. I got a quick one here. Score, a new dating app. The only reason I wanted to talk about this was because of the big O. And maybe if you're getting back out there and you're looking at things, it's very interesting. It's a dating app based on credit score. So you're going to get somebody with a 675 credit score or higher. You're not going to end up,
How about your social credit score? Did
uh,
you say enough nice things about President Z this week?
I did not. And we're going to be locked up for what we talk about later. But
Do you have a 675 or higher? Is that even a good credit score?
I think that's well above
If you met
the
somebody
average
that's
is like 714.
yeah, so if you met somebody with so that okay, so score you only have to have a 675. If you met somebody with a 675, wouldn't you be like, what's wrong with you?
I mean, it just depends on
Doesn't
you
that
think
mean you have like a
student
bunch
debt
of
or
oh, okay.
all this kind of stuff. You could have, so it's just an interesting thing. Whatever the company that did this, they also I think have like a bank account one, which
Oh,
is
really?
a little
Like it
sketchier.
tells you how much you have in your or it's like based on your assets or something?
Yeah, I think they kind of you can do it based off of like net worth. Neon Money Club. Um there's something else on their website.
Look, I'm not in
I
the
didn't want
dating
to spend
pool.
I didn't want to spend too much time.
I'm not in the dating pool as you are not either. So we really have no idea what we're talking about.
Yeah.
Producer Owen maybe be able to tell us a little bit more. But I will say, money is a big deal when it comes to dating and relationships. And if you have the money piece figured out, it does make other things easier. One other thing I'll say, did you know arranged marriages have the lowest divorce rate out of all marriages? That is a true fact.
Why?
Why? Because it is two families that are probably pretty similar background, pretty similar economic status that are getting together. I think it makes it easier.
All right,
But
that's
that is
fair.
a true fact. I'm not saying go get an arranged marriage, but I'm just pointing out a fact. Arranged marriages do have a lower divorce rate.
Okay.
And I do think couples with not, you don't have to have the billions of dollars, but I think if you're on the same page money wise, it probably has to, it can't hurt.
Yeah.
Right.
I don't disagree with that.
And debt is killer.
Yes, that is tough.
Debt is killer. If you come into a relationship with tons and tons of debt and it's going to be very hard to pay it off, it's very tough.
Well, think about what interest rates are doing to people with that now too. It's just unbelievable.
Right.
Especially credit card.
Now, there is a saying, as we all know, mo money, mo problems. How far into the mo money, mo problems do you have to go to venture into now that's causing you problems? You have too high of a credit score, let's say. Maybe there's a window. 750, 715,
750 to 800.
You're not that good at paying off your debt, but you're pretty good. You're in the middle.
You don't max out your credit cards, but you put a fair bit on there each month that
You're
could
not
be paid
stingy,
down.
right?
Yeah. Okay. That's Owen. Any we haven't given you a mic yet.
You want to
But
be able to hear him.
any comments? All right.
He's been smiling the whole time.
Yeah. He actually thought I saw him
And now
pull
he's
out his
turning red.
phone. Yep, he's turning red. He pulled out his phone,
He's
and I think
blushing.
he was signing up for it.
Yeah, he just downloaded the app. All right.
Oh,
Here's
okay.
the deal. So, Owen, by the time we have the next episode, why don't you get on to the app and tell us if you meet any nice ladies?
Yeah. We'll do research. We're gonna do R&D for them. We're live on the ground work here
And
at
Score,
Bullish.
if you want to be a sponsor, talk to producer Owen.
Yes.
All right.
We'll take a picture of him.
A dating app sponsoring two married guys on a show. Perfect.
Yeah, that would
Your target audience. All right.
Okay. Neuralink. We're moving on here. This one, I mean, we've touched on it. Obviously, Elon's got his hands on a
Sorry, I was
number.
in the camera there.
Oh,
I don't want to block you too much.
oh, that's okay.
Unless you want to see the back of my head.
Okay, we're done with that conversation.
No, I just
Neuralink.
want to say whoever set up the cameras could have an inch or two higher. Just saying. But anyway.
Yeah. No, well, I'll take blame for that one. That's
All
fine. Neuralink. Finally, we can talk about this. Elon's been doing a lot of things. We talk about Neuralink, Starlink, everything. People are going to try and get this implant, take over the world. Let's look at some of the first people here who are getting it. I think it's interesting. It's pretty cool to see. FDA gave approval for these trials in May. We had the first person actually have this implanted. I believe it was January. They've been recovering. Finally, we see videos come out.
Can you put it up on the screen?
I couldn't find any of the good
just go
videos
to,
that show the guy.
Go to just Google Neuralink. Just go to Neuralink.com just so people can kind of see it.
Oh yeah.
So while you're doing that, Neuralink, I'm just going to read from what they're doing here. So this is their mission statement, and then you can kind of scroll through the website here. But it's a brain-computer interface that has the potential to change lives for the better. It says we want to bring this technology from lab into people's homes. This is Elon Musk's company where they're literally taking people who are paralyzed, I believe, and
like quadriplegics or people who suffer from things like ALS are kind of their target. I wouldn't say market, but their target like patients that they're trying to provide better quality of life for.
And these people have gone from not being able to do anything to just by thinking they can play chess on a computer.
Yeah, I mean, we watch the videos, and it's crazy. The guy, you can kind of see what it looks like. Owen, if you pull
keep
the screen
scrolling, hit
up.
skip on the bottom there. So go down to surgery. So they have their own robot. It says if you can't read this at home, it says the threads of our implant are so fine they can't be inserted by the human hand. Our surgical robot has been designed to reliably and efficiently insert these threads exactly where they need to be. That's so cool.
Well, the threads are ridiculously small.
That's wild.
Yeah.
And now I'm not saying, I will say, okay, implants in the brain, a little bit end of the world esque to me from
Yeah.
my perspective.
I personally, I would never let this be put on onto my head.
Oh, you're not going to get one.
No,
Okay.
absolutely not.
Owen told me
Maybe
he
if,
was thinking about it.
yeah, Owen's just going to be our test for everything. Get the Neuralink, try out
Is
the
there an
Apple
app?
Vision
Is there an
Pro.
app where you can just date robots?
Probably.
That's called Westworld. Did you ever watch Westworld?
It was an
Did you
interesting
like it?
show.
Wild show. Now it gets a little bit too much for me towards the end. It's just kind of the same thing over and over, but I
Yeah.
thought it was a really good show.
Yeah. But
Anyways,
so before we get off on a tangent, getting back to this, the robot, they have a robot that actually does the surgery because of how fine these things are. But I mean, we watched the videos, right? The guy had like a 2 month recovery. He's playing games, he's playing chess. He's sitting there, in his wheelchair that he has and is just controlling everything with his mind. Move this chess piece there, and the cursor follows his eyesight and everything on there. I mean, it's really a pretty cool technology. And again, for individuals whose quality of life is not as great due to whatever circumstance, can certainly be something that changes that.
pretty incredible. Yeah, I mean that's why I keep saying on my show that technology is literally a miracle. It's
Yeah.
incredible.
Well, even there's a guy that I went to high school with, and it's not necessarily on Neuralink's level, but their machines kind of have like a similar design to this, and they're partnering with all these hospitals across the place where it's a rehabilitation thing to get people walking again, where you
Right.
literally get on the thing, you've got a screen that you can look at, so it's like you're walking and it helps you, move without having to get into a pool and do that kind of all that kind of stuff. So, I mean, it's that one's very, very cool. They're based down in Nashville, and I like trying to keep up with him. But to your point, technology that is creating better quality of life for individuals, driven by entrepreneurs with a vision to do that for folks. So, anything else you want to say there?
Nope, we can move on.
Okay. Elizabeth Warren wealth tax. I know you wanted to talk about this
Oh
one,
yeah, this
so
is a big
I'll
one.
I'll let
Okay.
you take it.
So not only do not only does a certain part of the political aisle want to go after billionaires' income, which we can argue about,
Yep.
but now they want to impose a wealth tax and they want to go after billionaires, they say, and they want to tax them, what is it, 2% per year with an
Yes.
extra annual 1% tax if you have a billion. And now they're saying that they don't just want to go after billionaires, they also want to impose a wealth tax on people with over 50 million, which
Yes.
I know is not everyday Americans. I understand that. But that's not that low of a bar. 50 million. I mean, it's like, okay, we do that and like how quick until it goes to 10 million, right? And not only are they saying we want to tax your gains in income or your gain in wealth, we want to tax the actual wealth itself. This
Yep.
is insane. This is literally communism. This is government confiscation of people's wealth. If you've ever read a history book, this does not end well. This does not end in happiness and more wealth creation. This ends in less wealth creation, more people impoverished, and less for everybody else. Because what capitalism does is it raises up everybody. True capitalism, not crony capitalism. This is communism. I would be very worried about this. Now, I would say I doubt this thing gets passed. Very, very low chance this thing gets
Well, they
passed.
tried. It was 2020 was the first time they tried, and it didn't go anywhere.
No, this would be pure insanity. Now, I know, look, we try to be middle of the aisle here, and I just try. I'm not saying Republicans do everything great either. Republicans make a ton of mistakes, a lot of big government Republicans, and a lot of the political stuff that goes on in DC is very uniparty esque. It's all the same stuff. It's just bigger and bigger government. But doesn't matter where you're from, you should really not like this. You really should not like a wealth tax. This is a horrible idea. It would be terrible for the economy. And I don't think it'll get passed, but if it does, I would be worried about it. I don't think it's a good thing.
Well, I think something that stood out to me when reading through the summary of this bill, it's on Elizabeth Warren's public website, is where I found some of this. But it talks about ultra wealthy individuals using trusts as a type of tax shelter, and guess how much it keeps from the federal government? $5 to $7 billion annually. Do you know how many times they throw around $5 to $7 billion like it's nothing?
Yeah.
So they're trying to pretend like, oh, and we're also going to attack trust, and it's going to create this amazing, opportunity to not allow ultra high net worth individuals to save on taxes. It's just ridiculous, and they just throw away money all the time.
Oh,
So that's my thoughts
well,
on it.
they're saying the goal is to raise 3 trillion in
Trillion
10
in 10
years.
years. Yeah.
So assuming 300 billion a year, basically.
Yeah.
Okay, so 300 billion is 4.8%. It's less than 5% of the annual amount of money the federal government spends.
Yeah. Which, not to mention, remember that this is on overall wealth. It's not like, oh, so and so's a billionaire. He doesn't have $1 billion sitting in cash where it's just like, oh, you can take, X amount from me each year. They're gonna have to sell stock, or it's part of properties, maybe other things that they own where they're not liquid. Not everybody is liquid, let's say. So that's another thing that would create issues.
If you take the combined value of all U.S. billionaires, so you take all their wealth. This is as of November 2022.
There's like 740, right?
There's $4.48 trillion held by all the billionaires in the United States, which there's about 813 billionaires here.
Yep.
Forget a wealth tax. Okay, let's just say you're so insane that you confiscate the wealth. Like you do a Mao style confiscation. Okay.
Yep.
You can now run the government for like 9 months.
Yeah.
Taking all their wealth. Forget the wealth tax.
Well, think about and what we're paying right now. The 12-month on the interest rate that they're paying right now is $1.1 trillion
Right.
on treasury payments.
Well, by the way, isn't it the top 1% that pay 50% of the taxes in the country anyways? So where do you finance the entire federal government anyways?
Yeah.
It's just a little more. It's just 2%. It's just 1%. What they don't tell you with any of these things is it's the middle class, the upper middle class that pays all the tax, because the wealthy don't have enough money to go around to even run the government. So what do? They go after the dentists, the doctors, the lawyers, everybody in the middle who makes $200,000, $300,000, $400,000, which, by the way, is a lot of our clients.
Yeah, and tax them out.
That's who pays all the tax.
Yep.
This is insane.
Yeah, I agree with you there. All right, let's move on to charts here. First one is from Bob Elliott. I know this is one you wanted to talk about as well, talking about private versus public markets and where they're currently pricing some of the assets that they have on the books. Private is obviously not as you just can't see as much there. They're able to hide a few things, so certainly taking that to their advantage is what it seems like at the moment.
Yeah, look, private markets are not bad for wealthy people. And if you're going to buy private markets, you need to be diversified. You need to understand the risks of what you're getting into. And the big risk is you basically lose transparency and liquidity.
Yeah.
Now, if you have enough money, that's fine. Maybe you say, I'll take 5 or 10% of my net worth. I'll buy some private credit. I'll buy some hedge funds. I'll buy some venture capital. But you got to know what you're getting into. What's happened now is a lot of these private credit funds are starting to go towards more regular people, everyday Americans, because the average or the net worth minimum you need to have is what, like $1 million basically to qualify for a Reg D. And so the government really, in my opinion, should adjust that upward. It should be a little bit higher minimum because the market's gone up so much because wealth is up double what it was.
As overall net worths and investable assets have gone up for individuals, that number should be moved higher, is what you're saying.
Yeah, and look, if you have $30 million, should you take 5% and do alternatives? I'm not going to say yes or no. Do what you feel comfortable with. But now we're getting people. I see portfolios coming in, $3 to $4 or $5 million clients where they've got 10% or 15, or I saw a guy the other day, 27% in private funds.
Yeah,
that's a lot of money tied up. That's not a small asset class. And when you have 30% of your portfolio now in alternatives, it's no longer alternative. It's like a core part of the portfolio, and so I get a lot of the argument. A lot of the argument these private fund guys make is like, look, there's all this money that's tied up in private companies that aren't going to go public. A lot of companies don't want to go public anymore because of high interest rates or because of the regulation you have to deal with.
The 60/40 is dead.
The 60/40 is dead, so you have to increase your allocation to private funds.
Yep.
But at some point, what happens is you bid up the prices of these assets to the point where you don't know what they're worth. And that's what Bob Elliott is trying to point out here. So do you have anything else from him on this? Like his commentary with it?
Um, I think I've got it. I've got it pulled up just on Twitter here. The post that he had done, basically just talking about private credit funds are lying to their investors about valuations and the underlying assets. They're basically marking it on their books as being much higher because there's another private person, another private fund manager who would be able to buy that asset at X amount, and so they're able to kind of hold the values much higher. But you can see how much higher in the graphic. The pink line is the highest private mark, and it's well above in a lot of instances where a lot of publicly traded pieces are being marked at currently. So not taking into account all the losses. I think one thing that was interesting too, there was a Bloomberg article, Pension and Investments did a nice article on it too that was very similar. Basically just talking about, hey, this was great to what I said earlier, the 60/40 is dead. Don't own stocks, don't own bonds, or at least put a part of your assets into this alternatives bucket. And when rates are zero, when money is free, very easy to do. And now that we've seen an uptick in rates, it's certainly created a scenario where, Warren Buffett says, what is it? When the tide goes out, you find out who's swimming naked. And we haven't necessarily hit the point where we found out yet, but we're kind of headed in that direction is what he's insinuating.
Yeah, I just think, look, again, for if you're in the right bucket, if you can kind of swing it here, fine. I understand what people are doing. I just think if you get into the zone where, you really don't have the net worth where you should be in these funds, like, look, it's not like, yeah, it's called private. They're not privately insulated from the economic cycle.
No.
You just don't know what's going on. That's the difference. Like Apple, we get reports every quarter. This is what's happening. There's disclosure. There's all these requirements. You're going to get all that same cycle in the private markets. It's not going to insulate you, but you're just not going to know until later. And then a lot of the private funds don't mark down their asset values until the end of the year.
Yeah.
And you're like, oh, wow, I thought I was up 1%. No, actually, you were down 16.
Which is fine because your money is locked up for another 5 years,
Right.
and it's going to go up, and
Right.
we're gonna, this is a 2x at least.
Right.
So, okay, let's move on to the next one. President Z, don't lock us up, please. This is another Bob Elliott one, just talking about iShares, the MSCI China ETF. It's down 20% again here on the 1 year basis.
Yeah, we've been ahead of this thing for a while about China's economic problems, and I just think it's getting started. And by the way, if you can, while I'm talking about this chart, can you pull up this other chart from Bob? He's got some good ones on China here. I just sent it to you on Zoom, but
yeah,
I think you're seeing weakness in the Chinese consumer. And you're not seeing that same weakness across the world. You're seeing the weakness in China with cars.
This is a good one. Yeah.
Did you see Volvo purchases were down like 40% in China for EVs, which is pretty massive?
Yeah, but did you also see there's phone manufacturer came out with that other car? It looks just like a Taycan, but it's $35,000.
Yeah, but then you're also seeing weakness with iPhone sales. You're seeing all sorts of consumer weakness. This is from the U.S., or this is from Bob Elliott pointing out how the U.S. imports now more from Mexico than from China than ever before. And we haven't been at this level since the early 2000s when China was given the favored nation status. And I think this is incredible. This is fantastic. This is one of the best data points that we could possibly hope for.
Yeah.
Is that policy matters. And again, I'm not saying President Trump was the best president ever. He made a lot of big mistakes. He printed way too much money. Obviously, personality-wise, people don't like the guy. That's fine. But just one policy point that he did very well was trade with China. And because we gutted manufacturing in China, what's happened is now all these other emerging market countries are booming. You're seeing Mexico boom. You're seeing India boom. You're seeing Indonesia and all these emerging markets. And now, again, middle-of-the-road analysis here. Biden has not really done anything to reverse that, which is good. And so for 4 years under President Biden now, to his credit, he's continued the line that President Trump took, which is to say we cannot do business with the communist country, or at least do the business that we used to do and be so reliant on them. And it's been a great move. So under both presidents, under Trump and now under President Biden, one positive that's remained under both of them is trade policy. This has been a great thing, I think, for freedom and for entrepreneurs.
Yeah, and a lot of jobs coming back to the U.S. as well, along with that. Mexico has obviously played it very, very well, positioning themselves as being an alternative to that. So I think that's a great point. Let's move on to the next one here. This we kind of touched on
We got
earlier,
Walgreens.
but again, yeah, it's Walgreens. So we did what, it was episode 11, I think, on December 5th. We saw a run up certainly in the stock. We were maybe a little early on the call, but I think there were talks of somebody was going to acquire them. But now we're looking at, since we talked about that, it's down 10%. It's hitting its lowest point, in the last 25 years. So, certainly an issue, and they're in trouble. We were talking about their cash bucket the other day.
Yeah, look, it's easy to play Monday morning quarterback on this one and say, oh, you could have seen the risk coming. But beyond that, they should have seen some of this risk coming. Like where was the pivot to online? Like it just never happened. I have you ever ordered anything from Walgreens.com?
No.
I don't think I've ordered a single thing.
The only thing I get from there are my prescriptions.
That's what I was gonna say. Your prescriptions, right? Which is very easy to disrupt. I mean, Amazon easily could disrupt them. I think they already have a pretty substantial drug business online.
Oh, I'm sure.
Right. So like the only thing Walgreens really has going for it, or had going for it, was those little Village MD clinics, I think is was that the name of it?
Well, and they put a ton of money into that, and they have not seen the return yet.
Well, they just took a huge write-off on it, like a $6 billion or $8 billion write-off or something.
Yeah.
Which I would have thought on the surface was a good move. I would have thought, hey, these little clinics make some sense. But then your problem with that is now you're in a very low margin business that's highly regulated, and they just did not make that pivot to like delivery, which they could have done. They could have done more of a Postmates type of deal. I believe the only outcome we're probably going to see here, other than pure bankruptcy, I doubt they'll end up in pure bankruptcy, is probably an acquisition. So that's what we saw with Macy's happen last year. And we made the call, hey, watch out for Macy's stock. And it was $10. Full disclosure. I mean, we missed the boat on that one. Macy's now is trading at 19 a share, 18.50. So it's gone up, not because it's a great business, just because they're going to get taken private and they're going to get recapitalized. And you know what's going to happen 5 years from now? The same private equity company is going to spin them off and IPO them. And I could almost bet that it's going to go down again a bunch, So maybe that happens with Walgreens. So that's why we don't give individual stock advice on a show like this. We're just trying to point out the fact that a lot of these companies, these zombie companies, have problems. And what happens then is real companies with real business models and great earnings like Amazon replace them.
Yeah.
That's the meritocracy feature of the market. And that's why we try to own the biggest and best companies. Walgreens, did you know Walgreens is down to, I think in the S&P now, a 0.05% weight or something? Like they could get kicked out of the S&P as well.
Well, and one of the points I had on this too is they were just kicked out of the Dow and replaced by Amazon in February.
Right.
So, I mean,
it's easier to get kicked out of the Dow than it is the S&P.
Yeah.
The S&P now. Yeah. Here it is. Walgreens is a 0.03% weight in the S&P.
That's crazy. Well, I mean, there's certainly some other companies who are working their way up.
Well,
they're not far off.
Well, here's who else is in the zone with Walgreens at the bottom there. You've got a bunch of companies you probably never heard of. Gen Digital.
No idea.
WestRock. Do you know what they do?
Nope.
You got JM Smucker down there. CarMax, and then you got Walgreens.
Yeah.
You've got ConAgra.
Does it show who's potentially gearing up to take their place, or?
Well, the S&P is a little bit different. You could stay at a very low weight for a long time in there. Like you've got Comerica, which has seen its stock drop a ton with the regional banking crisis at a 0.02% weight. You still got Paramount hanging on for dear life before they get sold. You've got Hasbro still hanging on for dear life. And Invesco, believe it or not, is hanging on for dear life there at 0.02%. But the bottom line is it's not a good sign if you get kicked out of the S&P, because what happens is you lose all those investment dollars.
Yeah.
Right. So
Yeah, that's a great point. Okay, next. This I think was just something super interesting to see what the cumulative returns are and staying invested and the importance of that. I know there's a bunch of stats that come out. If you miss the best trading day each year, it totally kills like all your return. There are things like that. But this is another one from Charlie Bolello. And if you had held on from the March 9th, 2009 bear market low following the great financial crisis and held it to this was March 9th, you would have seen a 16.7% annualized total return over the last 15 years, 916% cumulative. So just something very good to keep in mind. You had COVID in there. You had 2018 in there. It's been a great run.
yeah,
And last year or 2022.
You got to stay invested.
Yeah.
Absolutely.
Anything else there?
Nope.
Okay. This to your point, overall cash held on the sidelines is somewhere at like the $6.5 to $7 trillion mark right now. I think this is just speaking directly to U.S. corporations.
Oh, neat.
But
Okay.
again,
Good chart.
4.4 trillion was the number I saw. Just kind of talking about these corporations got that cash. They were able to potentially borrow cheap as well. And you can kind of see they're way above their pre-COVID baselines and have just kind of been holding on to that, having it on the sidelines, some dry powder.
Yeah, some of the concern I think that's coming too is, and this is a great chart, but some of the concern is that is it a blue line or black? I can't tell. It's either
Yeah,
blue or
black.
black. The darker line um, could eventually come back down towards where the average is.
Yep.
Because what happens with money printing is it gets burned off.
Yeah.
It's basically burned off like fat, quite frankly. And that's what Brian Westbury at First Trust, who Dave McGarrell is the CIO of their firm, Brian Westbury is their chief economist, has been pointing out. Now, Brian's been bearish, and that's been the wrong call. He's been mostly bullish and been right. He went bearish a few years ago, and I think ultimately he will be right. It's just a matter of when. And all it's going to take is you see that cash go back to reality. And we're seeing it with our clients a little bit here, right? It's like that burn off is taking a while, but I can tell you for a fact, people aren't sitting on that 200 grand the same way they were on average, right? They're paying debt off now. They're finding that there's a wage price spiral to a degree. You know, it's like, hey, we're paying everybody at Starbucks $20 an hour to pour coffee. So we have two choices. We either hire a robot to pour the coffee, or we increase the price of the coffee another 10%. Or the hamburger. Did you see Five Guys burgers and fries is $25?
Oh, and for one person, right? You're saying, and that's with a small fry. That's not even getting the bag of fries.
No. So it's like, okay, people are kind of waking up now to like, all right, this inflation thing isn't there. There's no free lunch here. Like at some point, we are all going to pay the price for the money printing. But the call to go bearish because that right this second has just not worked yet. And I don't think it's going to work for a while because we still have so much money going into the economy still being printed. Not a good thing. We're going to end up like Japan if we don't figure it out here. If we don't cut it out and stop printing like we are, we will end up like Japan, where you've got all this fake money in the economy, all this debt, and no growth. We're not there yet. We still have the entrepreneurs. We still have the growth. And that's been the saving grace of the economy is technology, is innovation, is growth. That's going to save us, I think, for a while. But it is something where I don't have it in the forefront of my top 10 risks right now of what we look at for clients. It's a over here risk. It's in the side. It's something to be watching for because if you burn down too much cash, you do have significant recession.
Yeah.
Could it take 3 or 4 years before we get there? Yeah. And could you make 20, 30, 40% equity returns in the meantime? Yeah, that's why you got to be in the market, you know?
Yeah.
And that, by the way, that's what you saw in the late 90s with the tech bubble. It's like all those years leading up to 1999 and 2000 were very, very positive years. But it was all multiple expansion. There's no earnings growth. It was all multiple expansion. But if you stayed out of the market for those 8 or 10 years leading up to the crisis, you missed out.
Yeah, and that's what I mean. Dan Ives, obviously, he's all over the place right now, talking about a lot of the things we're
Literally all
seeing.
over the
And
place.
yeah, no, he is. He travels everywhere. He's on every show you could imagine, every business show. But he's saying, hey, this is like the 1995 moment. At least that's what he thinks it
Yeah,
is in the run up.
couple more years.
And what happens too, and we've talked about this, is you kind of all this people with dry. We've even seen this at the beginning, end of last year, beginning of this year, is you had all these institutions that were bearish, that were holding cash on the sidelines, and all of a sudden they're now playing catch up. They're way behind. The returns have been terrible. People start to ask questions.
Right.
So you kind of see this influx of cash that then boosts things higher before, we see kind of things take a 180 and head back down.
Well, I've seen it firsthand where there's a lot of portfolio managers who like said, "Hey, the Mag 7 are overvalued." But they've been saying it for 10 years.
Yeah.
And now investors are waking up a little bit and they're like, "Wait a second. I've been in value stocks like you got to have some value, right? But I've been in 100% value for 10 years.
Yeah.
And my return is half of the S&P. What am I paying you for?" That's a problem,
That's the last chart.
Okay, perfect. Good segue.
Well, no, I'm saying the one that we looked at with Charlie.
Oh, right.
Yeah.
Right. And it's like, are they a little pricey compared to the broad market? Yeah, but are they great companies? Can you replicate them overnight? No. They have incredible moats. Like, good luck restarting Amazon. Like, do you think anybody could just snap their fingers and create a brand new Amazon at this point? I don't think so.
Yeah. I mean, at some point there will be
NVIDIA?
some type of disruption, and it's hard to see now. But who knows?
The
We'll see.
disruption has got to be, to me, if I had to point my finger at it, would be probably government regulation, like breakups. That's the only
Well,
thing
we're
I think.
seeing it with the antitrust with Apple. We'll see
Right.
how that goes for them. But
Right.
that's a years long process that just began. So
Which another product Owen's been testing out for us, the
Vision
Vision
Pro.
Yeah.
Said it was pretty good. Although he had marks on his face for like 4 hours afterwards.
Did you really? It was a little
Yeah,
tight. All right.
he didn't get it. He didn't get it fitted. He didn't pay the extra $500.
All right. Meme of the
Okay,
week.
so speaking of dry powder, we've got a meme of the week here, and this is for those who find Babylon Bee and things like that funny. This was a little dig at Hunter Biden recently and some of the issues that Trump's been going through with the valuations. But he put 3 Hunter Biden paintings up in Mar-a-Lago, and miraculously, it is now worth $500 million. So that
I
actually
saw
goes
this. I
back.
thought it was
Yeah.
funny.
Oh, I know. It's dumb, but it's very funny to me. So maybe he's gonna be able to pay that debt off.
He's a beautiful painter.
Oh yeah, the best.
Yeah.
What a train wreck. Okay, speaking of train wrecks, we've got L of the week. Quickly following up here, we got Sam Bankman-Fried was just sentenced this week, 25 or end of last week, 25 years. Fair. What do you think?
I don't know. Bernie Madoff got 150 years or something like that. Now, the one saving grace with SBF was that the investors are getting their principal back, I think you said, right?
Yeah.
Look, he obviously did something very wrong. He messed up. Should he have gotten, I doubt he'll do 25 years. I bet it'll be kind of like an Elizabeth Holmes deal, or who's the other guy who got out? He got out with like half the time served or a third of the time served or something like that.
I can't remember.
So he's obviously a very nutty guy. And I'm not saying that look, he obviously made a huge error, like really messed up, did the wrong thing. But I did read Michael Lewis's book, Going Infinite. Did you read that yet about the whole story?
No.
And now Michael Lewis doesn't make a judgment at the end of the book, which a lot of people got mad at him for. They said, like, you should have said that this guy is guilty. He really messed up. Like, this was really bad. And he doesn't do that. In the book, he kind of leaves it up to the reader to decide whether he got in too deep or if it was truly, fraud.
He started it with the intent of defrauding people,
Right.
or he got in over his head with all the money coming in,
Right.
tried to make it work,
Right.
and just completely lost control.
Which is not an excuse. And,
No.
I think he deserves the 25 years. But I also think that, like even Bernie Madoff, I mean, it's like, these guys, they just, they almost like have a legitimate business. Like that whole the Bitcoin FTX exchange was a legit business. I'm pretty sure,
Well,
wasn't
think
it?
about all the celebs that had to then protect themselves.
Right,
That they were trying to serve them subpoenas along
right,
with it and everything. It was like Tom Brady, I think Mark Wahlberg
right,
or Matt Damon for sure,
right.
and a few others. But
They had their name on a stadium,
yeah,
it looked legit on the surface. But
yeah,
that's the thing where that's my only, and I go back to that Bitcoin thing. It's just if I don't really understand it, like if I really can't explain why it's good to somebody other than, oh, look at Tom Brady's involved,
yeah.
that's where I just have a problem with it. It's like I can explain what we do to people. I can explain financial planning. I can explain basic portfolio management and why you should buy companies for the long run. I really can't explain to somebody Bitcoin. And again, that could cost us money in the long run. Maybe we should be in Bitcoin and we should have been doing some of this stuff. But I like so like what Kathy Woods is talking about. But you know, these are the stories where I'm just like, I don't know. To me,
I
it's
think
not
they
worth it.
did. You had a lot of other exchanges that went under. People didn't get their
Right.
even their principal
Right.
back. And so I think they did get a lot of the kind of bad characters out of the way in the last few years, which is maybe why we've kind of seen a more of a resurgence. It has become more regulated. People have become more involved as far as institutions go. So I don't know. Well, I agree with you. Whether
There's
he
just
did
not
it
enough
on purpose from
transparency
the
about it.
beginning, yeah,
Yeah.
it's hard to see. So,
But you do have this in the public markets, right? Like technically Elizabeth Holmes, now that was private markets. It was
yeah.
pre-IPO, but yeah, you get some of that. But
Well, there was even that stock. It was there was the car company
right,
Nikola,
right,
who they did their marketing video
right.
and they made it look like the car was driving, but it was actually at a downhill.
It was a fake
And
car or
they
something,
yeah, it was a
right?
fake car, defrauded people. That was I think a publicly traded company.
Yeah.
And then there was another one recently, a very small stock that was in trouble, but they announced that they were trying to pull who's the guy that he's leveraged a ton of debt and just put it in Bitcoin. I think it's MicroStrategy
Right,
that's done that.
right.
This guy tried to almost make a play like that on a smaller scale, stock through the roof. The guy gets out, and then the stocks were it's literally like a penny stock now.
Yeah, it was like 2 billion in
Yeah.
Bitcoin or something. So I don't know. That's where I'm like, if I don't understand it, I get a little cautious. So
Yeah. Okay, let's finish off here with zero or to the moon. We've got good old John Deere. I pulled this from your wonderful presentation you'd sent me. Um,
yeah.
Go ahead and say what you think.
Yeah, again, not investment advice, just prefacing it with saying that.
Yep.
But John Deere, from my analysis, the technology that Deere is operating is like next level. And they just did a deal with Starlink now, where you can basically get internet, which you're going to need in these tractors. If you're on a farm in the middle of nowhere, that's
Yep.
very important. And a lot of these farms are basically being run by robots now. It's a lot of it's autonomous. And you were telling me the other day that John Deere's got the ability. There's a farmer who can
Yeah.
tell
So
that story.
the guy who farms some of the land up where we hunt in Western Illinois, he let me in and my boys, we rode around. They've got a whole operation, right? So they've got two harvesters and then they have two tractors with grain trailers, and for X amount the combine could do everything. He likes doing it. He's been a farmer his whole life, his family was, but he's like, yeah, I don't even need so and so driving that tractor behind me. I can basically call it in because you sit in they've got a second seat, which is cool, so that's where I sat with my son, but you can see everything. And when the grain begins to get to the point where it's too high, it pops your camera on so you can see the level. You can call in the tractor, the arm automatically swings out. Like he can set what the follow distance is, everything, and be basically fully autonomous on that piece. If he wanted to pay a little bit more, he could be fully autonomous on the harvester going as well. And then that
Wow.
whole time you're seeing the numbers so you can
Right.
see what's this year's harvest looking like. I mean, they basically are like spaceships to some
Yeah.
extent in the amount of data that they have. We've got family who are farmers too. Same thing. They've been talking about how just amazing the technology is.
Well, and to an extent too. I mean, this is kind of the test ground for a lot of the autonomous stuff that's coming down the pipeline with Tesla or
Yeah.
these other companies like Waymo at Google, where on a farm you don't have the same regulation you do on the streets with
Or risk.
driverless technology.
Yeah.
So these guys can kind of say, okay, let's try out autonomous. Let's see what happens. We're on a farm. There's no people out there. Worst case scenario, you hit a scarecrow, and you're able to test this revolutionary technology. John Deere, by the way, happens to be trading at a very attractive price to earnings ratio. Again, not telling you to go buy it, put your whole portfolio in it, or even buy it, but just from my perspective, it's very neat. And I hear the stories, and I think this is one of those things you got to be aware of, because this is life-changing technology where farming in 5 years is going to look very different than it does now, and it already does.
And not to mention they're playing the bank on all this.
Right.
So they're
making
making all the
money,
interest.
I think, right?
Yeah.
From the financing.
From what we saw last time, they
Right.
help finance it, because even the guy we were talking to, he gets new equipment every so often. But even those, like the harvesters on the front, those things are stupid amounts of money too.
Right.
I mean, we're talking about premium vehicles. You get everything, full self-driving basically, and a couple of different harvester things that you put up on the front for beans and for corn. You're looking at $1 million and a quarter,
right,
for one piece of machinery.
Right.
Then you pay $500,000 for the tractor that follows, then another $200 for the grain truck. So I mean, you're looking at $1.5 to $2 million brand new for one set of these things.
Well, I saw a deer video a few months ago too, where I could be wrong about this part, where they can actually like identify weeds in a field when they're going over it, and they can almost like target them, like zap
Is this
them.
the I don't know if it was Deere or another company.
I think it was another company, but I saw that.
And I know Deere
rather than pesticides.
Right. And I know Deere for a fact, its technology can even tell you if the soil's the right dampness, if it's dry, where to water, be more efficient with your water supply so you're not wasting. And that's the coolest thing with technology. It's like, hey, if you believe that we live in a world with limited...
Well, that's kind of like what this is.
Right. Well, and it's like, if you believe we live in a world with limited resources and scarcity, which I don't necessarily agree to 100% on that anyways, but if that's what you believe, then it's like you should want entrepreneurs to do this kind of stuff, because the whole story of entrepreneurship is doing more with less. And that's what Deere's doing. So it's cool. It's just a really neat story to me. And I don't know if the stock will go up or down, but it's a really neat story to follow.
Yeah, I agree with you there. So that's it for today, folks. Remember, if you like the show, please subscribe, share it. Be sure to send the clarity, the confidence to people that you think might enjoy it. Be sure to tune in next week. Again, we've got the CIO of First Trust, Dave McGarrell, joining us. It's going to be YouTube, Spotify, and Apple Podcasts. And if you'd like to learn more about Stenger Family Office, go ahead, visit our website, stengerfamilyoffice.com. You can also give us a call, 630-912-8431. Request a complimentary starter account or kit, and we do starter accounts at $1,000. So appreciate you listening in, and look forward to having you join us next week.